Welcome everybody, this is Mike Hamilton from Trade the Easy Way with your midweek update. Interesting day in the trading room yesterday because I was looking to buy dips in the Nasdaq and the Dow, and the question came in from the group: there's a 4-hour sell signal, so why are you buying dips, Mike? We did actually short the open. We got short signals into the open, which we took for some very nice profits, at least 65 pips in the first 10-15 minutes on the Dow. Anyway, then when I closed the room, I was talking to the group about buying the dips, and I left them with my plan. And I'm just about to show you why I'm still buying dips in this market. This is one of the most bullish markets that I've known. I've been trading since the mid 80s, so I lived and traded through the early 80s to 87 boom, the dot-com push higher in 2000, and the post-financial crisis 2009 issue. So let's have a look at what we've got here. So jobs on Friday, and the stimulus is approved, but it's not even hit the market yet. People haven't even got these checks in the post yet. So this is the jobs situation in the US. We've got some initial jobs data coming in today, and then the main number on Friday when most of Europe is off. So here's the pandemic crash in the jobs. There's the bounce into May, June, July last year, and then we flatlined. And this is what we are expecting now. We're looking just for an uptick here, and you can see the last US jobs monthly figure was good. We added 380,000 jobs in February, but that still means that's still only half of the jobs that were lost here. So you can see we just no major bounce in the job market at the moment. So that leaves the economy 9.5 million jobs short from February 2020. So why am I so bullish this market? Well, this is one reason. This is in the CNBC website today, and Biden is just about to launch 2 trillion infrastructure. So apart from the 2-odd trillion rescue package, he's putting another 2 trillion into infrastructure, into broadband, transportation, water, you name it, he's doing it. So this is just one example of a huge amount of money that is being poured into the US economy, which is one of the reasons why the dollar up until a few weeks ago was very, very bearish. They're just printing it like it's going out of fashion. Right, now let's look at the markets. Right, I deliberately sort of stood back from this Nasdaq. So you can see here's the initial major bounce in the pandemic into August, September, a natural pullback, and then we get this buying pattern, and we go on another leg. But we get too hot, some issues to do with China, and then we do a 3-wave retracement back down to these levels. Now we've done this 3-wave retracement and we've got another little bounce here. I'm buying this dip. I was buying the Nasdaq futures into the close yesterday, just to get us back to 14,000, potentially up here to 15,000 plus. Okay, so I'm following this line of thought, this pattern with this pattern, and looking for this to fire up. As I've just demonstrated on those couple of slides, if we can get a continued recovery in the jobs, then this is going up here. The US GDP was 4.3% last week, and on Friday we saw a 300 pip bounce in the Dow in the last hour of trading alone into the close, into the end of the week close. So to move 300 pips in an hour into the close and hold that over the weekend is a huge bull signal. And all we've done in the Dow this week so far is just after that big push up on Friday, we just retraced into that range, and wound our way back. Okay, that's all we're doing. We're staying in that range as we wait for these jobs numbers to come out. Hence the reason why I am so bullish and investing as we head in towards April and May. So I'll just quickly pan out of this, and you can see there's a 1, 2, 3 wave correction. Here's a 1, 2, 3 wave push higher. So this is a very bullish pattern. We've got this channel here. So if we come out of this and start sitting up here, this is a very, very powerful breakout pattern. So this is actually a potentially very bullish. Of course, if we close underneath 12.2, 12.7, 12.5, then I'm wrong, and I will stop buying dips and I will potentially start shorting highs. But this is what I'm seeing. I'm seeing this pattern, this build up with a potential for a breakout that could potentially last into May and June. Now, so here's the Dow. So we had this very unusual push up on Friday, powerful push up on Friday. So we're just sitting under these all-time highs on the Dow. Now, admittedly, we saw some selling, saw some pullbacks yesterday, but all we're doing is coming back into reconnecting with the Friday breakup and potentially going to the top of this channel. If I pan back on this one, you can see how this channel comes from the September 2020 highs. Similar pattern here. Similar, that's good, isn't it? A similar pattern which could potentially break up and get us into 36,700 and potentially 40,000 at some stage in the year if we can sustain this level. Okay, I'm going to be wrong if we start closing under this 32.5 and we stay under 32.5. Alright, so if we simply bounce into that and fall off, then this market is in trouble. But at the moment, this is not a market to get short and stay short. This is a market to buy dips. Okay. On oil, so we've knocked into this 20-day average and we're struggling. Any market that can't get through the 20-day average is potentially heading down. So we had a 1, 2, 3, 4, 5 wave, corrective wave into this towards this 89-day average, which we've not yet touched. Huge bounce on the Suez issue. We've got OPEC meeting on Friday, but this has come up in light of a strong dollar. But if we can pull back, we've got invents today. If we can pull back into towards 55, 57 and hold, then I think we can break out of here and potentially go back up to 67, 68 and ultimately get a run into 75, 80. I'm going to be wrong if we stay under 60 and keep closing down here and come back and rest on 55, maybe even, or if we're very bearish for some reason, then that's coming down to 50. Alright, in the meantime, I'm looking at this as a bull flag. So there's the mast. All these dips have got bought. So we're having a corrective wave here, which is potentially over. But obviously the 60 mark is going to be crucial. Gold, I think gold's found the bottom. You can see this huge support from here, March, May last year. We've already had one impulsive wave up here. This is a full potential double bottom here. So if we can hold here and start closing higher, then we're going to get to 1750, 1760 pretty quick, and then start to make our way up and recovery into this trend line. If at some stage this year we break through here, then we could get back up to 2000 and above. Alright, so again, believe it or not, this is potentially a very bullish pattern. I'm going to be wrong if we stay under 1700. If we stay under here, then we're coming down to 1590. Okay, but I think this is potentially the end of the corrective wave, impulse correction, and then potential breakout if we can get that dollar to sink back and that to push higher. So quick look at stocks that I'm in. BT, looking for next stop 162. Again, look at this pattern down here. It looks bearish, a lot of red on the chart, but look at this, there's a big squeeze down here. And this is what the indices are looking like at the moment. So you've got all these, it keeps dipping, keeps dipping, keeps dipping, keeps dipping, and the market's just finding a base. All the institutions are buying the dips here in this BT, and then eventually they let it go, and you get a 1, 2, 3, 4, 5, 1, 2, 3 wave correction. So this is buyable down here at 120, 125. Impulse, pullback, move. Drop, pullback, move, pullback, move, pullback, move. So any weakness into 148 now is potentially buyable. This is my chart of the week, Rolls-Royce. We've already had a base, a break, a pullback, good impulsive push higher. Well, it's not an impulsive push higher, that's trend push higher. Pullback right into the pound mark, underneath the pound, holding. We're struggling. These averages are really holding this back at the moment, but I still think all these dips are buyable. If you're buying anything from 95p to a pound, get your stop underneath this recent low, and let's see if we can push back up here. I'm talking about a grind high, I'm not talking about a whiz higher. I think this could grind higher and ultimately end up the year at 140, 150 plus, if I'm right. If I'm wrong, we're going to close under 95p and we're going to continue lower. Alright, that's all I've got for you now. I hope that helps. Keep tabs with my website link, tradeeasyway.com, and anybody who wants to join my trading room, you need to come through the program, which is a 4.5 hour on the Saturday morning, and that gets you into our trading room, which operates 5 days a week with alerts operating the full 5 days a week. Alright, happy trading, hope you have a great Easter, look forward to seeing you soon. Thanks very much, bye for now.